Bismillahirrahmanirrahim. Hello, my dear friends and students. In this video, I want to explain the computer files during expenditure cycle. See, if we use, for example, a computerized system of accounting, what might be the several documents or procedures or files which we use for purchasing a particular product. Basically, if we use a computerized system of accounting, in this case, two types of files are needed in order to register the expenditure system, expenditure files, expenditure transactions. One type of file can be called as a master files, and the second type of file can be called as the transaction files. Then again, transaction files are divided into several parts. First, now let's go for the master file. What do you mean by master file? Master file is basically the basic informations of the supplier, the basic informations of the customer, and of course the basic informations of the employees. Master file simply means the database which we create for a particular transaction. For example, before to make transaction with the customer, name of the customer should be in the system. So the information should be available about the customer in the system, the ID of the customer, for example, name of the customer, the email address, the contract, the several information that we need about the customer, that one should be first available in the system. That file can be called a master file. Or for example, before to pay for the employees, first of all, the employee should be available, should be registered, name of that should be registered, should ID of the employee should be available, right? Contract of the information, the employee should be available, then we can make a payment. The same thing, for example, from the supplier. Before to make any contract with the supplier, name of the supplier should be registered with the system, the address of supplier, the contact, and the rest of the information should be available in the system. All those basics informations which are needed before to go for a contract, and that one should be available in the system, can be called as a master file. Now let us take a simple example of this one. For example, I want to purchase something from the supplier. These are the name of the suppliers. I've taken this picture from the QuickBook. First of all, name of the supplier should be available in this system. If name of the supplier is not available, of course, you cannot, for example, uh, purchase something from them. For example, let us take another example. Suppose if your name is not available in AIS class, of course, you cannot go for the exam, you cannot go for the quiz, and so on. Why? Because you don't have a master file. If your name is not available in Cardon at all, you cannot be inside the Cardon. Why? Because you don't have a master file here, right? So before to go for any kinds of transaction, your master file should be available in the system. For example, regarding this supplier, so name of the company is there, full information is available, and after that we can go for it is transactions. It means before to make any kinds of transactions, of course, the master file or the basic file should be available in the system. That is one of the cases. After master files, then we have, for example, transaction files. Transaction files means those files which are registered in the system after a particular transactions. It means when the transactions entered in the system, then we record these files. Otherwise, of course, no need for this one. But remember, once again, regarding master files, first of all, master file should be available in the system, and then we can go for the transaction. Transaction files basically includes the following. Requisition files, for example, as we said before regarding request, right? Suppose different department requested, please purchase the following product for us. One file for all those requests should be maintained here. Next one, open purchase order files. When we order, for example, for purchase, when we order for the purchase, for example, we receive the request from department, now we order from the supplier. All those open purchase orders. Open purchase orders means those are purchase orders which are issued but the goods are not received yet. So this can be called as open purchase order. How many open purchase order you have? So there should be a proper file for that one also in order to manage the business properly. Purchase order detail file. So rest of the purchase orders might be open, might be closed purchase order. Detailed information of all those purchase orders should be available. Number one, purchase requisition files. How many requests we have received? How many purchase orders are open? How many purchase order total we have? All of them should be in a proper file. For all of them, we have available information in the QuickBook. I may show you later. Right now. Next file is, for example, receipt file. When you receive the good from the supplier, as I said before, you should make a report for that. All those receiving files should be in one file. Next one is pending invoice file. Sometime, for example, some invoice might be pending. So list of those invoice which are pending. What do you mean by this one? For example, you received the invoice but goods are not received yet. You have ordered something from the supplier, goods are received, invoice are received, but goods are not received yet. So if goods are not received and invoice are received, so until to receive the goods from the supplier, we can call this invoice or we can consider this invoice as a pending invoice. So we can check that, for example, how many invoices are pending. And after that, of course, the next one is, of course, voucher file. Voucher file means a file should be open for a particular supplier only if everything is proper. For example, the good which we received is as per our purchase order. The price which they mention is, for example, as per our quotation. If everything is fine, if everything match properly, then on that case we can make a proper file for the supplier. Then and that file can be considered as account payable. So once again, these are the transaction file. So request files, how many goods are needed. So it is requested by different departments. So we have to make a file of that. Then one file for how many purchase orders are open. Yeah. Now suppose we may have 10 purchase orders. How many purchase order we made, detailed information of this one. How many items are received, for example, how many receipt files are made. Suppose 10 times we have received goods, so 10 times we have filled the receiving file. Then how many invoices are pending, and finally the voucher file. Now let us have a, then you can go, yeah, through the proper definition of each of them. The information is available. I don't want to go for this one. Now let me go for a simple example of this one. So previous one I have shown this picture in the vendor section, and that was regarding the master file. This section is regarding our transaction file, and I have taken it from the QuickBook. In transaction file, you can see, for example, purchase orders. How many purchase order we have? List is mentioned here. Item received, list is mentioned. Then, of course, bills list will be mentioned. Payment list will be mentioned. How many checks list are mentioned. Credit card mentioned. Sales tax payments. So all those transactions which we made, list of them will be available for us as a report. So like this as well. Even for example, the transactions we made, for example, right? During the year for sales of something, for purchase of something, all of them will be considered as what? As a transaction file for us. Next one, for example, regarding employees. Even for example, when we register the employees in the system, registration of all employees can be considered as what? As a master files. So this is also a kind of master files. But when we go for the payments of employees, so this can be called as a transaction files. It means basic information is a master file. After that, transaction can be called as well the transaction file. So this is also a kind of transaction files. In purchase, we have purchase, for example, by vendor, purchase by vendor summary and details, as I have shown at the beginning. So these all of them can be considered as a transaction files. Regarding account payable, for example, aging of account payable, for example, vendor by summary, vendor balance by summary, vendor's balance summary, vendor's balance details, unpaid bills, for example, account payable graph, transaction list by vendors. All of these can be considered as a transaction file for us. That was regarding the second step of accounting uh, cycle, business accounting cycle. This third activity or cycle in the business activity is basically conversion cycle. So of course, conversion in the case of conversion cycle, also we have several activities, but of course it depends on the nature of the organization. For example, if the organization is a manufacturing company, of course they use raw materials and apply several labors and overheads to produce products. So our activity is management of raw materials, management of labor, and of course management of materials. So all of these are a kinds of activities which they create for us in the stage of conversion. Why? Because usually manufacturing companies convert raw materials into finished goods and they apply labors as well as they apply what overheads. But in the case of service companies, usually their input is of course the labor. They use the labor force and provide a service for us. So their activities might be less. But in the case of merchandising business or merchandising companies, which can be retailer or wholesaler, they usually relatively use little labor. This organization purchase inventory from one hand, of course, and sell it on the other hand. So their activity might be less. But whatever is the activity, so whether it is more or less, so it's a kinds of activity that we should record in the book of account. So this was very simple, and this is the third activity. The last activity in the accounting cycle is, of course, this one. In the cycle of business activities, this one, fourth one, the sales or the revenue cycle. Or we can say this is the fourth activity or the last activity. And through the cycle, the business generate revenue in the organizations. And what are the steps for this one? So it means how the business can go for the revenue cycle. Revenue cycle basically start from here. So they receive the customer order. So organization receive the order from the customers and then deliver goods to the customer. We send the good for the customer and then we request for the payments and then we receive the payments. It means four steps are available here. So it is very simple. So four steps are there. So customer order, and of course, so those steps which we have mentioned in the case of purchase also might be applicable in the case of sales as well. Why? Because the purchase is sales from another side. It means it is purchased from the buyer point of view, it is sales from the seller point of view. Even for example, we cannot say the first step is receiving the order from the customers. Even the customers may have received the quotations and so on, bargaining before this steps, right? So even this those use ID steps or procedures can be applied in this case as well. So whatever is the case, so simply I have mentioned these four steps: receiving order from the customer, deliver the goods, request the payment, and finally receive the payment from them. So thank you so much. So I'm going to stop here. Your theoretical aspect was up to this point. So please do not forget to subscribe to YouTube channel by the name of Mohibullah Zamani for receiving more videos regarding the QuickBook. Thank you so much.